Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Tuesday the 18th of February, looking at euro dollar, which has been under pressure obviously throughout the past 2 weeks, this big downtrend, sharp move to the downside. But I would start to say that is this the beginning, and I'm saying just the beginning, of a potential recovery scenario, or at least the dissipation of the selling pressure, because we saw yesterday the market just sort of holding ground. Now, perhaps, sort of bearing in mind that the President's Day national holiday, public holiday in the States, sort of would have taken a fair amount of volume out of the market, and it does seem to be the case that that was what happened. However, there's been a stabilisation this morning as well, only sort of 5 pips lower on the day. Now, how the market responds as the US session comes back in and US traders come back to their desks will be key, because obviously what we've seen is these the daily momentum indicators are very negative, very deeply oversold though. Now, the momentum is clearly to the downside, but is it beginning to slow? That downtrend comes in at 108.45 today. I'd watch that. If that starts to be broken. Look at this hourly chart. We're starting to see just consolidation. Now, nothing yet in terms of recovery. I've been noting that you need to see the RSI above 60 on the hourly to really suggest there's some sort of momentum building. You want to see the MACD lines decisively above neutral. You'd also want to see a lower high breached, and that first lower high is 108.63 at the moment. That was the lower high from Friday before the market just drifted off again. And ultimately, beyond that, you want to see a second lower high breach, and that is 108.90. This reaction high from Thursday. So we'd need to see obviously a lot more before you start to think that a possible recovery is going on, because at the moment you've got to continue to play euro dollar to the downside as the market continues to fall. On a daily basis, you're making lower lows in each of these candles of the past two and a bit weeks. We've seen a lower daily low. So that would suggest supports are not holding. So initially you're looking at 108.20 being your line of support. Is that going to hold today? And if that gets breached, what are you looking at? Well, I mean, you're looking at supports that are almost 3 years old now, back at levels not seen since, April 2017. So almost 3-year lows. So you've not got a great deal of support to hold up euro dollar if it does continue to fall, but there is just slight inklings of perhaps a recovery starting to sort of threaten. Anyway, how the US markets traders come in this afternoon is likely to be a key moment. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.